Welcome everyone to another episode of the Our Crypto Talk Show. Today we have a very esteemed guest with us. We've got Julian Kwan, who's the CEO and co-founder of IXS, and he's been in the trenches building the regulated side of crypto, think tokenized real world estate assets, compliance rails, and trying to make TradeFi stuff trade like crypto without people getting nuked by, I think, the authorities is something that he has been working on lately. And he's an expert in tokenized assets and RWA. And I've been uh, reading his LinkedIn, and I got to say he's one of the most intelligent and probably someone who has a very strong opinion about things. The people I've researched on for this show, one of the top people. I think I'm very, very excited to talk to him. And welcome, Julian. Welcome to the show.
Thanks, Sahil. I appreciate the intro and the positive comments. And yeah, great to meet our crypto talk community. Happy to jump in and talk about all things RWA and IXS. And yeah, looking forward to it.
Great. So one question that we always ask all our guests who are founders: how did you get into crypto? What did you do before it? And how has your journey been building IXS and everything around the crypto space?
Yeah, sure. Yeah, IXS is my seventh startup. I have previously done advertising, real estate, hotel development. I think the genesis of the platform was more focused on real estate and sort of the Web2 developments of online P2P crowdfunding type models. And we're already in the space back in 2016, 2017. And when we saw the ICO boom, we immediately thought of this technology making a lot more sense than call it Web2. And in the Web2 space, we decided that we should sort of just go all in and put the whole business kind of on chain and then build all that key infrastructure. So, anyone can issue and trade a real asset token, which is a combination of many things, but in simplicity, all the blockchain technology, smart contracts, wallets, etc., plus the regulatory framework of broker-dealer licenses, exchange licenses, and securities licenses. So that's where we ended up, and IXS now sits as the sort of settlement layer for real asset tokens. Anyone can invest from anywhere in the world. It's fully licensed for crypto, custody, securities. And we're expanding. We got a lot of expansion plans on the roadmap this year as well.
Got it. And when it comes to IXS, what would you say? Are you more targeting retail more? Are you targeting institutions more? What is you say?
So, yeah, the original model was embarked on a mission to allow everyone with a dollar to invest. We actually achieved that in terms of people were able to register with a photo ID and put in $1 USDT and get an equity token of a startup. So, but the market actually changed quite a lot in the last year or two, and it went from a lot of private assets, which were by their nature private. They were more challenging to scale. But what happened was the industry started adopting the financial instruments a lot more. So the tokenized treasuries, the tokenized money market funds, the financial instruments, fixed income. So we saw that trend about a year ago. We pushed much more than into the institutional space, and we now have tokenized treasuries, money market funds, and private credit tokens coming to the platform. And we really operate more as B2B model, where we partner up with fintechs and crypto exchanges, and we power the back end of all their RWA tokens. So for those that aren't really aware, crypto, commodities, securities, RWA, they're all different assets. So they have different regulation, different licenses. So you can't just easily stick these two together on an exchange. So it means that, all the crypto exchanges, they want to actually list real asset tokens. They have to go and buy licenses or build licenses or rent licenses or partner up with groups like us to do it legally. And that's why we signed a joint venture with 4 crypto exchanges, but it's the same for the fintechs. So a lot of the fintechs, PayFi, FinTech, they have large user bases. Like one of our partners is Line, the super app in Japan. There's 96 million users. Now, Line wanted to give their users access to real-world asset tokens, but they don't have broker-dealer licenses. They didn't have blockchain technology. So we're the first RWA partner, which ticks both of the boxes. And then all the Line users can come through, and we have multiple plays coming out related to that moving forward.
Got it. Got it. So yeah, I think in the past year, we've seen a lot of shift when it comes from retail to institutions. Another shift that we've seen in the past year is, I think, AI. AI has been a huge, huge player, and especially in the last month, it has boomed like nothing before. So I was, again, as I mentioned to our community, I was going through your LinkedIn before the meeting. So I read that IXS is taking things up on AI agents. Would love to know, what do you think is like the intersection between AI and RWA? Where do you see it headed, and how IXS as a company is working towards it?
When are you planning on putting this podcast out?
Probably in a week or so.
Okay, cool. So I can talk about it then, because we're about to make some major announcements today. And I was like, all right.
Yeah, that's a great question, and it's good that you picked up on that. You know, what I think is very exciting is the development of the agentic agents in the crypto space. This is kind of exploding, as you know, but there's a very, very big difference between real assets and crypto that most people are still not very aware of. So to break down, to start it off, the differences: stable coins such as Tether, USDT, and USDC, which everyone's aware of, are fiat-backed stable coins. They're better called stable coins, but the world has somehow included them in real world asset tokens because people consider cash as being real assets behind it. So if you take out the stable coins, you then have a universe of real world asset tokens, and where we focus on is the securities. So a tokenized treasury, a tokenized equity, a tokenized debt, a share of your company, a share of a tokenized VC fund, a tokenized real estate fund. This is very, very different from a regulatory framework, from how the tokens work, from how do you interact with them, from who can buy and sell them, from where you can buy and sell them, to what you can do with them, et cetera, et cetera. There's many layers. And so IXS can handle all of that. The reason I bring it up is because if you, again, separate the stablecoin component, when you think about crypto and RWA, you're basically comparing Ethereum to a real estate token. And why this explanation is important is because currently we have a world being rapidly developed for agentic payments to interact with crypto, right? And as we all know, that can be done in many different ways, but it can also be done, permissionlessly. You can plug a wallet into Uniswap. They don't care who you are. You can buy and sell whatever you want. You can go away. So that's purpose built for the current first wave of agentic AI payments. However, what we're building is the new world of the agentic real-world asset token agents. So these will be agents that can interact with securities, which come with the different complexities that RWA has versus crypto, and it'll be the same for the agents. So if you think about an agent in crypto, they're able to operate in a similar way that humans are on platforms that require no identification. So you don't have agents today that can, actually it's impossible. You can't go and set up an agent today that sets up an account on Binance and passes the human KYC and the proof of address, etc. Now, that's fine. So that's kind of the sex world. We can get there at one point, but still, I think there'll need to be a human behind the agents, or a company behind the agents that will actually KYC. So people will still be able to interact with these agents, but it'll be more like probably a B2B model where there might be like a master agent to make it come. But before that even occurs, agentic agent can interact with crypto on a DEX, probably instructed to buy and sell, trade some tokens. Great. So yeah, so our play is to leverage the many, many years of investment that we made, both in tech and licenses, to build those RWA agents on top of our regulated architecture, but build them in the most kind of decentralized, the most opportunistic way that allows them to. So we'll be able to offer real yields, as in US dollar yields, as in treasury token,
crypto tokens, offering real yields to agents, which I think is going to be an explosive space. And I think it's an enormous opportunity because I think that what will happen regardless of agents is investment management, investment portfolio management, investment management, asset management, fund management. It's just going to be 100% driven by AI inputs and outputs. So the next evolution is that, and you've seen this, Anthropic announced a partnership with a 30,000 human organization that does investment advisors to build the agentic investment advisor agents. But that's just the advice. That's research, that's content, that's analytics. But we're taking the next steps where, okay, once that's done, what about if these agents could go off into the platforms and actually buy and sell and balance a portfolio of real world asset security tokens, which I think is going to be explosive. And I think that's just a very, very, like, I think you're in space. To me, it's just like many things over the years, this is just 100% the end game for sure. Why do I want to, people have been essentially proving there's appetite for this by, I mean, if you think about what, setting limit orders, even in an exchange where whatever asset you have, right? And it gets to this price, sell and buy back and all this stuff. That's essentially like the 101 version of having, if you had an actual agent said, what's the next evolution of it? It's live 24/7. You can buy it and sell it. And actually, if you're balancing against his portfolios, but it just goes on and on and on. It's not just like it's not a one set episode. And the humans above that will see that then this will become like multi-dimensional and just a massive extension of what that first layer of it is. So yeah, so to summarize it all, we believe in it. We believe that this is the next big opportunity for RWA. There's been a few, and we're probably one of the best positioned groups to take that forward. We've done many kind of world firsts, and and we're hearing it first on this podcast. This will be the first podcast we talk about, even though it might be a few days old once we announce that today.
Makes a lot of sense. I think I read an X article by Hasib from Dragonfly, where he mentioned something similar to you, that now we are in the end game of these things. Crypto, as we know it, wasn't made for humans. I think this was the title. Crypto wasn't made for humans.
Yeah, that's right. That was a good point. And but essentially, I think like everything, there'll be this sort of hype cycle, but then there's the actual build outs. But the thing that's very kind of exciting about this, I think, from a build out perspective, is the build out is as you know, with all things AI coding now, is just so if it was a 2-year build out before, it's now going to be a 2-month build out. That's just high level, depending on what it is. But yeah, I think you're right. It came, but that, and this ties it all together as well. Like, why put your assets on chain to interact with on-chain money? But how much money is there? Well, most of these guys are crypto, but then now the US is going to print trillions of dollars of stable coins. There's going to be a lot of TradFi people that have nothing to do with crypto that are going to want to get their cash in the bank, earning nothing, put it in stable coins and buy and sell real asset tokens and treasuries, private credit. And then the forward thinkers there will put that into agents and sit back on the beach and program it and watch it in live motion, and it goes 24/7. And you saw that on the weekend with the war, the Iran and the US and Israel that had begun. And like, I saw some really interesting comments that was like, BTC is disadvantaged by being traded 24/7, and it goes down and up, and then the other markets don't up until Monday. And then by the time Monday comes around, it's fairly stable. But point being is this will be 24/7. The assets will grow. The use case for RWA will continue to grow. What you can do with these assets. And so I think that you'll need these agents to match the sophistication of the product development, which is still very early, still in tokenized treasury and all that. But that'll one day be, taking assets and splitting in 100 different ways and having 4 different strategies you can do with them. And yeah, so anyway, that's we've been very excited and working behind some closed doors to get this thing moving. And yeah, that's something that IXS is very focused on.
Definitely would love to read on the update that you guys put out today. And Possibly we will try to get this episode out as soon as possible so that we don't fall behind.
Yeah.
Uh, Another post that I saw on LinkedIn, again, this one caught my eye first. I think this was posted yesterday, was on multi-chain distribution, and how you mentioned that issuance is a problem that was solved, and now the problem is the compliance settlement. So what are your thoughts on that? What do you think 2026 brings regarding that?
Yeah, I think I mean, there had been different challenges for the industry over the years. At the beginning, there was no infrastructure. Then there were the quality of assets were very low, and then and 7 years later, turn up and Larry Fink says everyone gets tokenized, and Wall Street agrees, and Trump agrees. Now everyone's rushing for the door to get in. Right. But what has always been a challenge, regardless of all challenges there, was just like the buy side of these RWA assets. And when there was only hardcore crypto people, they weren't interested in real world assets. That was the bottom line. And we used to call them security tokens. And we know this because we were one of the first to start, and it was very challenging. So the buyer pool didn't exist back in 2018. It started, I mean, there was a bit of buying, but relatively speaking, it was very small. The actual first product market fit for RWA was 2022, 23, when people were like, oh, well, treasuries are paying 5% and stablecoins earn 0. So what if we could put treasury on chain, and then $200 billion of stablecoins would earn yield, which anything better than 0 is better, right? So kind of ironically, the first product market fit was a treasury token, which is a wildly accessible asset, not for everyone, highly liquid. A lot of these things that didn't initially gel with why are we doing this? Why are we tokenizing assets? It was all originally seen as the main value proposition is going to be for private assets because they're challenged in so many ways that public market assets not. But lo and behold, the actual first use case came back in the public markets per se. So that then led to what else can we get? What else can we do? Which led to, okay, well, money market funds and now moving into private credit and US dollar backed yield, which is what all the crypto exchanges want. It's what all the fintechs want because it's the complete opposite of crypto. So US dollar backed assets, earning institutional quality yield. It's very, very attractive. And marry that with crypto being extremely volatile, a lot of tokens going to 0, plus the unique element that stablecoin dollars are illegally not allowed to pay yield, right? So you have two interesting assets, and stablecoins have always been like, when BUSD was still around, it used to be Bitcoin, Ethereum, BUSD, USDT, and USDC were always the top 5 coins. So essentially half the top market cap is stablecoins, is US dollar coins, right? Because they're their use case. So, so anyway, I think ultimately, you've got to this point where, regulators around the world, it's like, okay, this is good for us. There's more transparency. There's a lot of opportunities here. The US government's like, if we tokenize US dollars, we'll create greater US dollar dominance. We'll force them to buy out debt. That's a win-win. Again, in the digital world, we're all going to have digital currencies, and I think RWA benefits dramatically. And I think it's a flywheel created, which we've said for many years. The more RWA will give more use case to crypto. Right, that's just the bottom line. Assets to buy, you're going to have to get more stable coins, more Ethereum, or whatever you're going to need to get into these assets. So it's a win-win for everyone. Even though back in the day, a lot of people in crypto were hating on RWA for strange reasons that I'm still not really so clear on. But now you see, if you look into crypto, if you go to, consensus in Hong Kong and, there's like 3 main narratives. It's always Bitcoin, and it's stablecoin and RWA. And every other asset class in crypto has proven to be extremely volatile, in the end of little value. I mean, you can argue all you want about it, but, where have we gone with, and they might come back, but, overall, where have we gone? Coins and NFTs and metaverse and maybe 5 other categories. And that's fine. It's experimental exploration that RWA was always going to be like kind of the Warren Buffett play of just slow. And at the end, it's bigger than everything by a country mile. And RWA industry way supersede the crypto industry at some point, because there's way more real world assets than there are crypto. So, but again, it helps crypto because it gives more use cases. So that's how we kind of see it.
I read agree. Last time I was at Token, RWA was all the hype. And I think one point that really stands out is there are a lot of experimental narratives, as you mentioned, and then there are the narratives that we know are going to stay. And I think RWA definitely, the Warren Buffett analogy suits it very right, that this is something that I think everyone in their heart of hearts knows is going to stay.
Yeah. Yeah. And I think it's also like there will be huge buyer pools for RWA that have nothing to do with crypto, not in a negative way. Like they just won't matter. Like when you tell TradFi people that you can put your cash into stable coins and either buy RWA assets or even lend those stable coins in 10%. And it's like, well, you get 10 basis points in the bank. So you're like, so that's 100 times the return for exactly the same dollar. I mean, that's fascinating. And still that fascinates me. And still most people don't do it. But yeah.
Okay, so before we wrap it up, one final question for you, Julian. Where do you think is the market going in 2026? Your non-financial advice for the community?
Yeah. I think that there's a massive disconnect with the price action of crypto and the actual, call it, real utility now. And that's not for all crypto, but that's for a lot of crypto. There's clearly a massive downward swing on the altcoins, but that's because Bitcoin went down 50%. So that's just normal as well. Bitcoin down 50, altcoins down 90. Same as Bitcoin up 50, altcoins up 90, or whatever the number ends up being. I personally, we've now this is coming out, we'll probably announce that we're opening up in the US now as well. The biggest market by a mile, the capital, the assets, the volume, multiple blockchain listings last year. We went from Coinbase to like 10, BitGo, Kraken coming bullish. It's like there'll be 10 to 20 IPOs this year that are meaningful. There'll probably be even more that companies we haven't really heard of that much. That means that there'll be 20 to 40 companies tapping the US capital markets, which are the biggest and most liquid in the world, for investment and expansion. So what's also happened that, again, people staring at the price that aren't really doing much research or don't care to do much research, the actual infrastructure that's being laid now over the last 24 months, if you'd said what's happening now a couple of years ago, Bitcoin would have pumped a couple 100% on some of the news. Now it doesn't even move. There is an insane amount of buy pressure coming now that we're plugging into the capital markets of the US, which is also driving other regulators to be more positive and more accepting, because if America does it, we're going to get on board or we're left behind. And so the summary of all of that is I think we're going to come into a very, very strong market this year. I think it's an election year. It's the midterms in November. Any president wants their people feeling wealthy, markets pumping. And it might not feel like that today, especially in the last couple of days with recent activity in the Middle East. But ultimately, like, I think we're going to see, I don't think Bitcoin has lost one point in terms of what it does or what it means since it began. I think there's been a lot of people that have left. I think a lot of people are upset that it's being institutionalized. Though I said Bitcoin's for everyone, but I don't like these institutions buying, but it should be for everyone. So a lot of those people, I think, are maxis and have a pretty distorted view of like what everyone means, and including the digital asset treasury and all these other people, the ETFs, that they think seemingly upset that this is kind of happening. But if you want it to be open for everyone, it's open for everyone, right? You can't have it both ways. But in all in that, I can't see, I can see things massively turning around. I think there'll be a lot of people think there won't be an altcoin season. I think altcoin season has only ever been a factor of Bitcoin's movements. So if Bitcoin can make a strong comeback, then we should see an even stronger altcoin comeback. And there might be more tokens than ever, but I think like IXS token, there's less and less of those by percentage that actually have a real utility and that have a real business behind them. All these things that after many, many, many years, now everyone's crying for real business, real teams, real revenues, real clients, stuff that we've been talking about forever, that most people never used to care about, right? Yeah, so I'm very bullish. I'm very bullish on what we're building. I'm very bullish RWA. I'm very bullish on our agentic plays. I think the RWA volumes is just one way direction. Now, how it's not going to be linear, but it's definitely all tracking up. And I think more and more crypto exchanges, fintechs, they all want to sell these assets. They need to get them from somewhere. That puts us in a very strong position. But overall, there's going to be more platforms to buy it on, crypto exchanges, fintechs, payfis, more listed companies with more capital than we've ever heard of, looking to invest, to grow the assets, the industry. And, I think this is all just extremely bullish. And, that's my prediction for this year. I'm very excited. Although, right now it's not having such a great couple of weeks.
I think that is a very strong point we can wrap this podcast on. A bullish Julian Kwan giving you his non-financial advice, people. So keep an eye on IXS and their latest update, which I can say would be done by now, by the time we release this video. But please check them out and also stay bullish on RWAs, on Bitcoin and everything crypto. It was great having you, Julian, here, and would love to see what IXS has in store for us in 2026.
Thanks for having, and appreciate you guys taking time. And yeah, come join our community. Lots of exciting updates. We're in there every day. This is going to be a big year. All right. Thanks, Sahil. Appreciate it.
Thank you, Julian.
Bye.
Bye-bye.